Hi everyone, my name is Robin Speziale and I'm the national best-selling author of a book called Market Masters. So in this video I'll be talking about someone who I've talked about many times before. He's one of my mentors in the investing world. His name is Peter Lynch. And Peter Lynch ran the Magellan Fund at Fidelity for a period of 13 years, but it was one of the best periods of investment returns ever by an investor, a mutual fund manager. And over those 13 years, he achieved a 29% annualized rate of return, which is just phenomenal. It's something that many want to achieve, very little do. I think it's 80% or even greater of mutual fund managers who can't even beat the S&P 500. So he's one of the greats, and he is a growth investor. I read his book, One Up in Wall Street, probably at least once a year, and it's very easy to skim now. I've read it so many times. But he also wrote another book called Beating the Street. It wasn't as popular, but he simplified a lot of his investment strategies in Beating the Street. And so there is one section which is called 21 Investing Principles. And this is a section I'm actually going to read out right now. Okay, so these are Peter Lynch's 21 investing principles found in Beating the Street. These are all in Peter Lynch's own words. So it's number 1 through 21, and they're not in rank order, I'm sure, but here goes. Number 1, when the operas outnumber the football games 3-0, you know there is something wrong with your life. Okay, Peter Lynch had a good sense of humor, obviously. Number 2, gentlemen who prefer bonds don't know what they're missing. And as we know, as an aside, bonds will generate lower returns over time than stocks. Number 3, never invest in any idea you can't illustrate with a crayon. Number 4, you can't see the future through a rear view mirror. Number 5, no point paying Yo-Yo Ma to play a radio. Number 6, as long as you're picking a fund, you might as well pick a good one. Number 7, the extravagance of any corporate office is directly proportional to management's reluctance to reward the shareholders. Very true. Number 8, when yields on long-term government bonds exceed the dividend yield of the S&P 500 by 6% or more, sell your stocks and buy bonds. And I think this is a little bit contradictory to what he said before, but some of this is true. I would still stick with stocks for the long run. Number 9, not all common stocks are equally common. 10, never look back when you're driving on the Autobahn. 11, never bet on a comeback when they're playing taps. 12, the best stock to buy may be the one you already own. And this is a really, really interesting and important one. I love to add more money to my existing holdings, especially the ones that are going up. I add money to my winners. Number 13, a sure cure for taking a stock for granted is a big drop in the price. 14, if you like the store, chances are you'll love the stock. The same goes for products or services. As an aside, number 15, when insiders are buying, it's a good sign, unless they happen to be New England bankers. Sense of humor again. Number 16, in business, competition is never as healthy as total domination. So this is really interesting. Peter Thiel, if you research Peter Thiel, he talks about these near monopoly companies like Google, and these are the type of companies that you want to invest in over time. Number 17, all else being equal, invest in the company with the fewest color photographs in the annual report. This is very true too. If you read Warren Buffett's Berkshire Hathaway reports, they're black and white. If you go to berkshirehathaway.com, it was coded in the 90s, and the coding hasn't been updated since the 90s on the website. 18, when even the analysts are bored, it's time to start buying. 19, unless you are a short seller or a poet looking for a wealthy spouse, it never pays to be pessimistic. 20, corporations, like people, change their names for one or two reasons. Either they've gotten married or they've been involved in some fiasco that they hope the public will forget. And finally, 21, Peter Lynch says, whatever the Queen is selling, buy it. When the government privatizes a company, buy it. And we saw in Canada, at least, the privatization of Canadian National Railway, and it's gone on to become one of the best performing stocks on the TSX. So this wraps up 21 investing principles. written by Peter Lynch in his book, Beating the Street. Again, Peter Lynch is one of my favorite investors. I would definitely recommend do as much research as you can, read all of his books. They will make you a better investor. So talk soon, guys. If you have any questions, email me at r.speziale@gmail.com or visit my site at robinspeziale.com. Talk soon. Happy investing.